Hi, everyone. Welcome to Rise and Thrive with EHE Health, our new weekly interactive platform where we'll discuss and learn about all things health. Over the last couple of weeks, we focused on relationship health and physical health, and today we'll discuss financial health during uncertain times. My name is Lauren Gottlieb. I'm the Director of HR at EHE Health. I joined the team in October of 2017 and oversee all things HR operations and administration, everything from recruiting, employee relations, performance management, payroll, benefits, so really overseeing the entire employee experience here. And I am beyond thrilled to be joined by our guest, Bridget Todd from the Financial Gym. Bridget, welcome. If you could please walk us through your background and your role as head of financial training at the Financial Gym, that would be fantastic.
Awesome. Thanks so much, Lauren. I'm excited to be here with you guys today. As Lauren said, I am currently employed at the Financial Gym, which is a financial planning company that takes a fitness-inspired approach to your finances. We have financial trainers that work with clients individually to help customize financial plans for their lifestyle. The greatest thing about the Financial Gym is that we are accessible to people from all financial backgrounds. Unlike a traditional advisor, you don't need to have any minimum number of assets to work with us. We want to help people of all financial shapes and sizes. So that's where I'm at now. My background before this was at a hedge fund and private equity firm. I worked in liquidity analysis for portfolio managers, so basically doing trade support as they were purchasing investments, making sure that their books lined up, booking corporate action. So kind of large scale budgeting somewhere in the finance world prior to this. And just found the Financial Gym by being introduced to our founder, Shannon McLay, and realizing that there's such a need for financial literacy for people who are usually, overlooked by the financial services industry. So I head up our team of trainers now and create content and and create plans for individuals who we work with.
Excellent. So before we dive in, if you have any questions at all, please type them in the comments section and we'll do our best to answer as many as we can. So let's get started. So Bridget, I think it's fair to say that COVID-19 has really impacted everyone in one way or another, and a large impact of that being on the economy, where a lot of companies have had to make the difficult decision to either lay off or furlough their employees or even implement salary reductions or reduction in hours, which has no doubt led to an increase of stress and anxiety amongst the working population. So if someone is still working and is fearing their job security, what are some ways that they can prepare and proactively manage their situations if their work status is affected?
Yeah, for sure. So, the first thing to do is if you are worried about losing your job, you're still employed, and you want to just conserve as much cash as possible, now is an okay time to maybe pause some of those traditional benefits, pausing a 401k contribution. You're not commuting right now, so pausing commuter benefits. Doing that so you can increase the amount of money that comes to you each paycheck for as long as you have a paycheck, and putting that into savings instead. So that's a way to be proactive if you're fearing that you're going to lose your job. If we're talking about you've already lost your job or you're being let go, there are different ways that you can negotiate and make sure that you're covered through your severance. And so the first thing I tell people is if you're getting laid off, everything should be negotiable, and you never know what your employer is going to say until you ask. So it's worth a shot, and don't be afraid to ask for it, right? They can't fire you twice, right? That's it. That's all there is, right? So the first thing that I always tell people to negotiate is health insurance coverage and having the company pay for it. So most people, when they're let go, their company will say, we'll continue to pay your health benefits through the end of the month, or for 1 month after you leave. So if you get fired or let go on the 20th and you only have 10 days of health coverage, that's really not enough time. So I often tell people to go and ask for a minimum of 2 to 3 months being paid. And in addition to that, making sure that they're paid out for all vacation, or if you're a bonus company and you get let go in the beginning of a year, you should still be due your bonus from the previous year. If you work a commission-based job, make sure that you know all the commission for closed deals and you're making sure that that's paid out before you leave as well. So really just not leaving any money on the table. Like, you put in your time, you put in a lot of hours at that company, and you deserve to be paid for that work. And in addition, like, people, especially given the COVID crisis, like, they want to be able to help you. And if they can't really pay you, the least they could do is maybe cover your health insurance for 3 months until, you know, we're back in a place where jobs are readily available.
Definitely, because I think, you know, oftentimes when negotiating severance, people often forget that you can negotiate for medical benefits after they leave the company. So I think it's definitely a good thing to at least ask for, to your point, saying, you know, especially during the COVID-19 era where medical benefits are so crucial. So including that on top of salary continuation is definitely a great idea. And with, you know, in regard to medical benefits, is there any other options if someone does lose their job? What are some options for them besides COBRA, as COBRA is, you know, a very expensive option for them to have?
Yeah, so obviously the best case scenario is you get COBRA coverage for a few months paid by your previous employer, you find a new job, and then you can reestablish it with your insurance coverage somewhere else. But that's not a reality for some people. So there are really two other options you can consider. You can do your state exchanges. So you can go on and you can apply for the Obamacare, the Affordable Care Act coverage that is available in your state. Or you can go to more of a private marketplace, like one that comes to mind is Policy Genius, and you can go in, you can shop for plans that are not, you know, attached to the state program. What happens with those is they're usually, for the state programs, based on your income, they'll fluctuate in price. So if you make more money as, like, say, a freelancer or something like that, they might increase that over time. With the private exchanges, right, you're going to have not great coverage, and it'll cost you less than COBRA, but you'll have a really high deductible. So you might be ending up paying $7,000 out of pocket should you have some kind of medical emergency. So if you're someone who needs good coverage, if you have a pre-existing medical condition or you see doctors frequently, you have medications that you have to take, paying COBRA might actually be cheaper in the long run because you'll have the same level of coverage you had at your previous employer. So all the same costs, except for you're paying the full monthly premium yourself. Whereas if you go through a private exchange and you try to go, you know, get insurance on the cheap, you might only pay $300 a month instead of $800 a month, but then you have to pay for everything out of pocket. So you're paying for every doctor's, you know, everything until you hit your deductible. And then things start to be covered by insurance. So it's really important to understand that, like, yes, if it's a short term and you don't visit, you're a healthy person, you don't visit doctors frequently, you don't have medications, buying through the exchange, a private exchange, is probably your cheapest option. But if you need the coverage, it's going to cost you a lot. And there are some ways around that too. I, at one point, was covered under a private exchange carrier, and I had a $7,000 deductible. And I was like, if I get in an accident, say it's a car accident, I don't want to have to pay $7,000 to go to the hospital, right? So in addition to, it was like $250 a month for the health insurance, I bought a supplemental accident policy, which is $30 a month. And that had a coverage of up to $7,000 should I be in a serious accident. And so that insurance would have kicked in to cover my full deductible on my health insurance. So there are some ways around it, and you might have to piecemeal things together for situations like what we're in right now. So make sure you're doing your research and make sure you understand that out-of-pocket cost that might come with the health insurance if you change from COBRA to a state-sponsored or private policy.
Awesome. I think that's really helpful to know too, as a lot of people don't take that into consideration. Those deductibles or those premiums.
That's how they get you.
And so, you know, taking the focus from benefits to unemployment insurance, if someone has been laid off or furloughed, what are some steps that they should take, or what should they know about unemployment insurance? As you know, there's over 30 million claims now nationwide. So what are some tips for everyone going through that phase?
Yeah, so this ties in like negotiating your severance. So in addition to asking for those additional benefits and however many weeks they're paying you out or months they're paying you out, when they give you your severance, they can choose to give it to you in a lump sum or in periodic payments, like you'd receive your regular paycheck for the next 2 months, 3 months, however long the benefit's supposed to last. And so what I always tell people is negotiate for a lump sum payment, because the way unemployment works is you can't file for it until after you've received your full severance. So you want to make sure you receive it all at once, and then a week later, even though you receive 3 months worth of payment right up front, doesn't matter, you can still file for unemployment right as soon as that's received. So negotiating that part of your severance is really important, because it's almost like you're double dipping, right? You already got paid for 3 months, but now you're also going to get a weekly unemployment check. And so it just increases the amount you have available. This is going to be really important, like when the $600 additional pandemic pay that we have goes away, because now like people are getting $1,000 a week, which is great. But once that goes away, it's going to be down to like 400 or 500. And that's going to be really a lot harder for people. So yeah, right now $1,000 sounds great, but if you're not getting that come July, then you're going to be really grateful that you negotiated for a lump sum payout, because you have 3 months worth of paychecks saved elsewhere. So that's really important. They've waived the waiting period for filing for unemployment, so you can literally apply the day that you're let go. You can file for benefits. Obviously, it's not the most fun process right now. There's a lot of long wait times. You might have to call at a specific day, or you might only be able to file on a certain day. So understanding that that's what's going to happen. But the good thing about unemployment is you could take it, especially now, like good thing now is you can take it as if you were a freelancer, or if you were a part-time employee. They've extended the benefits to help those people as well. And they're traditionally overlooked by the unemployment benefits. So making sure that you get your severance paid out right away, you apply for unemployment right away. And then the other thing that's also a great trick is you don't have to file for unemployment every week, but you can only collect unemployment for 36 weeks. So if you file and then you're like, oh, you know what, I really don't need to be paid this week, I'm good, you can skip a week, and then that will extend the amount of time that you can receive the unemployment benefits. So if you don't need to take the money and you think you're going to be out of work for longer than 36 weeks, which I hope not, but it does happen, then you can extend the benefit by skipping a week here and there if you don't need the money.
Mm-hmm. Okay. And for these employees who may have been laid off or furloughed, especially on the furlough side, as they may want to get either temporary jobs or part-time jobs as they're waiting to get called back to their company, what are some ways that, or some resources that people can use to find new work elsewhere?
Sure. So there's a ton of resources out there, and it's really good to know too that you can take on part-time work and still collect unemployment. Depending on the state, it may affect the amount that you take home, but you can still work a certain number of hours and still collect unemployment. So that's something to keep in mind. And then if you're looking for where can I find work, there are tons of resources online. Like you can look at Indeed. Themuse.com is a great place for like companies that are hiring right now. They make it really easy. Your state government website usually has a careers / COVID-19 careers page. So making sure that you're looking there. Our site, The Financial Gym, has a COVID resources page that you can also view. Kiplinger, there are a ton of resources out there, people that are hiring now. So if you're looking for work, you don't have to do like part-time work of like going and being an Uber driver. That's really not something people want to do right now. Mm-hmm. So making sure that you're like Amazon is hiring, Ace Hardware is hiring. There's a lot of companies that are still looking for employees. Some industries haven't been as impacted. A lot of finance companies are still hiring accountants. There are jobs that are going to be recession proof. People need delivery drivers. So like there are a lot of places. Domino's is advertising that they're hiring. So like it might not be the most fun job. It might not be something you ever thought you were going to do, But a lot of times I have conversations with clients and, they're like, oh, I lost my job. And I'm like, well, the next job doesn't have to be the job, right? We just need a way to make ends meet until we find the right job. And every job is going to have some important skill that you take away from it. So I would recommend that if you're looking for part-time work, being a delivery driver is something that's very popular right now, obviously. Some places like Home Depot's, Lowe's, Walmart, they're all working and they're like the only game in town, so they need extra people. So you could pick up hours there. Starbucks is starting to open new places. So those are just some recommendations of quickish part-time jobs that you could look into. And then really looking at your state government website to see what kind of career opportunities are there. Because the unemployment people, they need people to help answer the phone. So you can find work in a lot of places you probably never thought you would look for work.
That's right. And especially for those looking for their next permanent job, as we were discussing earlier this morning, that a lot of companies now are realizing that working remotely isn't as bad as people once thought. And so it is doable. So I have to imagine there's a lot of remote jobs now as well, as that has become a possibility in this environment.
Yeah, I mean, remote work is, kind of going to probably be the way of the future. It would seem a lot of people are realizing, like, why am I paying for space, renting or leasing office space in this big city where real estate prices are so high, when I can have half of that staff work from home. And so looking out for that, I mean, even if you're looking for, like, right now, part-time work, virtual assistant work, a lot of things can now be done over video chat and done remotely. So keep an eye out for that. I know a lot of clients are doing remote interviews. People are hiring. It just might not look like what you thought it was going to look like. So being prepared that we're all in this new normal and what you thought you were going to have as your next job might look totally different right now, a year from now. So.
Right, definitely. And I would love to shift now, as we've touched a lot on those who've been laid off or furloughed, but to those who are still working, who may have had a salary reduction or reduction of hours. What are some tips that you at the Financial Gym give to your clients on ways that, now that people are looking closely at their budgets, what are some ways that they can better manage their expenses?
Yeah, so the first thing to do is to look at your monthly obligations, your fixed expenses, and figure out which ones you can delay payment on, which ones you can cancel, and which ones you can negotiate. So, obviously rent, mortgage payments, there are some leeway in some places, but those are like, all right, I'm probably going to still have to make that payment, right? Or I'm going to have to, in 3 months, I'm going to owe 3 months of payments, so I might as well just try and pay it monthly. Then looking at your student loans, if they're federal, they should be at 0% interest, and they should be automatically, like, all payments should stop unless you choose to make a payment. So making sure that that's not happening. You can call, if you have a private loan and you call them, a private student loan, they will likely also offer you a forbearance for a period of 12 to 24 months. So they will delay payment for you, but they will still accumulate interest. So you can do that. You can try and negotiate, ask for them to temporarily hold off on charging interest. Like I said before, if you don't ask, you don't know, right? Everything's negotiable until you get a firm no. So for student loans, personal loans, credit cards, you can call those companies and ask them to reduce your interest for a period of time, or to delay payment for a period of time. So the best scenario is actually that they reduce your interest to 0 and then delay your payments for a period of however many months. Doesn't always happen, but you can try. So lowering interest is, I usually recommend that first, above like, oh, can I skip a payment? Because all that happens if you skip a payment and you're still incurring interest is your bill gets bigger, right? You owe more 3 months from now when you go to pay it. So reduction of interest, trying to negotiate that, and then negotiating when you have to make your next payment can help alleviate some stress on your budget. Anything that's a membership or subscription service, you should probably have already canceled, but if you haven't, calling your gym, canceling your Stitch Fix, you're not going anywhere, so you don't need to look good, kind of thing. Just finding all those ways that you can temporarily reduce those fixed costs, those obligatory things that you have to pay. Like I mentioned before, a good way to trim expenses or to increase cash flow is also to reduce your payroll deductions. So, pausing a 401k, pausing any commuter benefits, pausing your HSA or FSA contributions will give you more cash, which will be beneficial when you're, pinching pennies when you've taken a salary reduction. So keep that in mind. And then once you've really gotten to the bare minimum on the fixed side of things, then we get to the variable expenses. And it's really easy to fall into an online shopping trap right now. Like everything's 70% off. Like I made that mistake already. So we all have our vices, but setting up with you, like sitting down and thinking about what do I need on a weekly basis, like dollar wise, like how many dollars do I need? I go to the grocery store once a week. It costs me $75. I like to order out once a week to support local business. That's $25. And then like stuff comes up, I would take a walk and I'm like, oh, they're selling coffee here. I'll grab a coffee through the takeout window. So leaving maybe another like $30 for that. So like it's $130, right? So that's it. That's what you get every week. And some people like to do that in cash. Some people like to use credit cards like me. I like the points. So I still want to put everything on my credit card. So how do I track that? It's so easy to swipe and forget. So what I tell clients to do is you can use your credit card, but you should pay it off every week. So say every Friday you want to pay your credit card, it should always be $130 or less. And if it's more than that, well, that's money you borrowed from next week. So next week you only get $110 or something like that. So kind of setting up that kind of game and making it, something that you're paying attention to. We have all the time in the world to manage these things and pay attention. So I think that's a great way to stay on top of the variable expenses, which is usually what gets us into trouble. Especially now when like student loans can be paused, you can get relief on your mortgage payment. Like all of that can be negotiated. Companies are willing to do that. So you just have to watch what you spend on everything else and not go in an Amazon black hole.
Right, because as you said, setting a budget for yourself, I think it'll make you think at least twice about, do I really need that shirt that is now 80% off? As so many companies are now throwing out those really great sales. But as long as you set a limit for yourself, I think that it really, is the key so that you're staying on track with what you've budgeted. And a question that has come in is, how can I include any unexpected expenses into my budget?
Yeah, so what we have clients do, and we'll talk about some different types of budgeting, but we call it goals-based budgeting. So like you want to travel, you want to do, you want to buy a house, you want to save for retirement, but we also have a fund most people have that is just like a life money fund, whether it's like I had to put new tires on my car or something like that. And so what we have our clients do is a percentage or a dollar amount of each paycheck goes to those buckets. So right now, like you get whatever you get paid, you have your fixed expenses, your variable expenses, whatever's left over should be divided kind of towards those goals. And so I highly recommend that everybody has like a like just in case life fund, and they put, even if you put $50 a paycheck, like you probably won't really miss that $50 a paycheck. But when you need new tires on your car and you've got a side savings account that has, $400 in, that's going to be really helpful. So I recommend, and what I do for myself is if you have annual expenses, like you probably have your credit card annual fee, Amazon Prime, I assume everyone has Amazon Prime, and then you have like a membership, an organization membership, and you spend at least, $1,000 a year fixing your car. So take that amount, the total amount of those annual expenses, and divide it by 12, and then just save that number every month for as long as you can, right? For as long as you have the income to do it. And that way, when things come up, you can pull money out of there. Kind of the same idea, people like do that for Christmas shopping, right? Like I know I'm going to spend $2,000 in November, so I'm going to save all year a separate fund. And some people put it in an envelope. Some people have the self-control where it's just a savings account and they don't touch it. So kind of thinking of tips and tricks of like, okay, how much do I think I need? What does that equate to on a monthly basis? And if it's a reasonable amount, right, like $50 a paycheck or something, then you should set up a transfer so that that's automatically happening, or you can update your direct deposit. So like $50 each paycheck goes to that separate account that maybe isn't linked to your checking account. So you can't really get it, when you just want to like go have more fun. So I think that's a really, really great way to think about it. And then in addition, sometimes emergencies happen and you don't have time to prepare for them. So sometimes what you can do is if you have to put it on a credit card, you can then afterwards transfer it to a card that has 0% interest. And then those usually have 0% introductory periods of 15 to 21 months. So whatever that charge is, you can pay it off without incurring interest in, 15 to 21 months. If you know an expense is coming up, you can actually open a credit card that has an intro 0%. So you can put it on there. A lot of companies, like if I had a client who needs a new computer because it broke and whatever. So like Best Buy or Apple or any of those places, they can give you financing options, right? You don't have to pay it all right now. They'll give you a financing option. And a lot of times you can negotiate, especially now, for 0%. Interest for at least a year. Mm-hmm. So making sure that you do that is going to be really important for emergencies that come up that we don't have cash on hand for.
Okay. And do you recommend any apps, or how do you recommend to your clients on tracking their budget?
Yeah, so different things work for different people. I have an Excel spreadsheet that I use, but I'm also a finance little nerd, so that makes sense for me. Clarity Money is a good app. That's actually part of the Goldman Sachs Marcus brand. So if any of you have seen their high yield savings product, they purchased Clarity Money, and that's a great like app for your phone, helps you track your spending, shows you like the value of all your accounts. You can link your different banks there. So it's very similar to like a mint.com, but it's a little bit more user-friendly, a little more updated. Mint is still a great tool. I have a lot of clients that use that. Daily Budget is also, I think it's an Apple App Store app. And you actually put in what you spend every day. So it really depends on what you're looking for. For more holistic, like you want to see everything, you want to see every credit card, every bank account, your car loan, your mortgage, like Mint is still going to be kind of that resource. But if you want to do something like just track, like you only really use one credit card, that's where you do most of your spending, I would look at either like a Daily Budget app where you write down everything you spend, or setting up a new account with Clarity Money and only linking the one credit card, right? Because the more things you link, the more crazy it gets in there, and the more like, oh, my rent's a fixed expense, I don't really care, but that's skewing your numbers, right? You just want to see what the credit card spend are. So if you want to see that, you can get a new account and just do the cards that you spend money on, so that you can only track your spending without seeing those other random fixed expenses that will make it look like, oh, I spent $5,000 this month. Yeah, but 2,000 of that was rent, right? So I only care about the other 3,000. So I think that's a good tool. YNAB, or You Need a Budget, is another really popular one. It's a little more involved, like you do more manual work in there than Mint or Clarity, but that can be good if you're looking for that accountability, because you have to go in and you have to update things and change where the money is going so that you can actually see the end results of your budget. So if you don't want to make an Excel sheet, I would say, but you want to be a little more hands-on, YNAB or You Need a Budget is probably the next thing. And then if you want more hands-off, just like casual tracking, Clarity and Mint are going to be more of those, because they do all of the work for you. You can just ignore the alerts they send you and pretend it didn't happen.
Yeah, I feel like budgeting, a lot is gonna come to life of new things that you didn't realize that you were spending money on. You're like, oh, that's
Yeah, like so many clients are like, I'm saving so much money in quarantine. I can't imagine what I was spending money on before. I'm like, been trying to tell you this for months.
So I think we have time for one last question, which is how should we navigate our investments, specifically in real estate and the stock market? Should we be buying or selling, or just staying and waiting this all out?
So the answer is it depends. And the reason I say that is because with investing, there are different timelines for different goals. And so if you're planning to try and purchase property sometime in the next year, you shouldn't be sticking your money in the stock market hoping that it's going to go up, because realistically, we have no idea, no control over what the stock market's going to do. And 12 months is not a long enough time for you to recover losses should they happen. In addition, if you make a lot of money in 12 months and then you have to pull it out, you actually pay a higher tax, higher short capital gains tax if you take the money out within a 1-year period. So for any goal that's short-term goal, if you're thinking about buying property, if you're planning a wedding, do not invest that money. Keep it in a high yield savings account that's paying, 1.5% interest, because you never know where the stock market's going to be. On the flip side of that, like the stock market does historically return 7% per year, and which means it doubles every 7 to 10 years. So if you're like, I'm going to retire in 10 years, but I'm really scared about my investments right now, I would say don't be, right? Because 10 years from now, we'll have gotten through this and we'll probably be, twice as high as we are today. And so making sure that you understand that, like, timing is going to be really important. And if you're investing for something that's 10 years away, you should be pretty heavy in the stock market. So having a 90% of your portfolio in stocks, 10% in bonds for goals that are 10 years out. Now there's like life money that happens in the middle, right? Like I'm not buying a house next year. I'm not retiring for 10 years, but like in 5 years, I might want to buy a house, or I might want to quit my job and travel for a year. So how do I invest for that? And that's like a hybrid of like cash or stocks, right? You could do a more conservative mix of stocks and bonds. So you'd have more like 50-50 stocks to bonds for goals that are within a like 5 to 7 year range. And so thinking about that and knowing how to allocate your investments is really important. The next part of the question is, should I invest now? And that also depends, right? We talked about that. Timing is important. Do you have the money to invest? I had clients come and say, like, we really want to invest in the stock market. It's so cheap. It is cheaper than it was in February, but it's not cheaper than it was last year, right? It's still higher than it was last year. And it's definitely not cheaper than it was in like 2008, 2009. So it's all kind of perspective, right? We've come down off the highs, but it's not dirt cheap, right? It's cheaper. So if you have free money, you should definitely put it to work there. But don't do that instead of putting money into an emergency fund if you don't already have one. So our kind of qualifications for should you invest right now is, do you have a fully funded emergency fund, which is 6 months of your expenses saved in cash? If the answer is yes, okay, that's door number one. Like, do you have a job, right? Are you secure in your income and sure that you're going to have it for at least the next 3 to 6 months? If that's checked off, okay, move to the next step. Is all of your consumer debt or high interest debt paid off? So not student loans, not mortgages, those things you can have and still invest. But if you have $20,000 on a credit card, you should pay down the credit card, right? Because the interest rate on that is going to be 20%. And I just told you guys, you're only going to make on average 7% per year in the stock market. So you're still worse off by 13% if you don't pay down the credit card debt first. So thinking about those things, if you check all those boxes, right, and then you can say, yep, I have free money, I have $300 a month that I can put into an investment account, then go ahead and invest, but keep in mind the timeline for when you want to use it, right? Is it 5 years? Is it 10 years? And then invest accordingly. Invest in, stocks and bonds more evenly if it's a shorter term goal, and more aggressively for stocks, like that 90% number I said before, if it's going to be, more like a 10-year goal.
Perfect. And Looks like we're out of time right now. So please, thank you everyone for tuning in and tune in this time next week for a discussion on time management. And be sure to follow EHE Health on Facebook, LinkedIn, and Instagram for additional content. And Bridget, thank you so much for taking the time to speak with us today.
Absolutely. Thank you guys for having me. If you have any questions about the financial gym, you can find me at bridget@fingyms.com, or you can go to our website, financialgym.com, and set up a free consultation call with our company.
Excellent. Thank you again, and we'll see you next time.
All right. Thanks so much, guys.